Hello everyone, back to this YouTube channel. I was away, and what I was doing is I was basically just creating an algorithm for the markets. Right now that the algorithm is done, this is what the algorithm does. It analyzes, let's say, 20 to 30 forex pairs, and it gives me a list of the top 10 pairs where it sees a good liquidity scheme for me to analyze. I'll then analyze it and determine whether I want to take a trade on that pair or not. I've analyzed the following 10 pairs and I've seen a good trade for AUD/USD, so I'm here to explain it basically. As you can see, let's start with the higher time frame bias and what the algorithm saw basically. Right here we had tops in the market. Those tops were liquidated as soon as we tapped into this high. We tapped into this high right here instead of a reversal because we liquidated a lot of stop losses here and we should have reversed from there, but we didn't. What we did is we reversed a bit, gave people the impression that we are going down, and then we failed through to the upside. Usually, when the market, when there's like, let's say a stop loss area and it gets triggered and then the market reverses and then it fails, I consider that what the market is doing is it is aiming for the next level of stop losses. So what I did right here is I came to the 6 hours time frame and I looked at AUD/USD, and what I saw is this next level of liquidity right here around these tops where we are right now testing. So I believe that the market is going to liquidate these tops right here, at least this huge resistance line, going through to the upside, possibly tap into that high right here. We'll see how that goes for the markets. On top of that, let's go down to the 30 minutes time frame and check my execution right here. My execution is fairly simple as well. I saw these double tops. I used the same exact pattern. I saw these double tops right here. Those double tops were liquidated through to the upside. The market then was supposed to reverse, but it didn't. It reversed a bit, gave us the impression that I'm going for this liquidity right here, and then it reversed back to the upside and failed. When the market fails to tackle a stop loss area and then reverse from it, I usually look at the next level of liquidity. So I came to the charts, I zoomed out a lot right here, went back in time, and saw this area right here. As you can see, this is the same area as the 6 hours time frame. We have tops right there, and therefore I decided to target this area right there, and I took this entry right here through to the upside. We'll see how it goes and I'll update you guys. Guys, as you can see right here, the market pushed through to the upside already into my TP. I want to talk about a little bit of the emotional aspect of that trade. So when I took that trade, I took it right there, I believe so, and then the market started going through to the upside from there. It went through to the upside almost just below my TP area right here, and then it melted from there into this area right here. And as you can see, any trader at that moment, as the market came back to their TP and started going back, they would close the trade, let's say, right here, because they don't want to miss out on all these profits. They would panic and close that trade. However, it's very important to notice, look how close it came back to my break-even point, and then it then pushed through to the upside. So it's very important to notice that not reacting emotionally to the charts is oftentimes the best decision that you can do. Now, of course, could the market come back and hit my stop loss right here? Of course, that is a possibility. However, guys, and this is very important, I want to lose it. If that trade doesn't work out, or that bias wasn't that great, or that execution wasn't that great, then I want to lose it. I want to be capable of putting it in my journal and analyzing it later and discovering why I lost it so I can improve. I want to lose it if it's not a good trade. However, if it's a good trade, then I don't want to miss out on the profits by closing the trade earlier, let's say, because I panicked. So if it's a good trade, I want to know that it's a good trade by it reaching my TP, and if it's not a good trade, then I want to know by it coming back to my stop loss and hitting it that it's not a good trade. So I can then put it in my journal and analyze it later and determine why I lost and how can I improve. Now, what's happening right now is that we just had a 3 drives pattern, 1, 2, and then 3 to the upside right there, just above the 0.66750 area right here, and then the market started melting through to the downside. I believe AUD/USD could be pushing down into this area right here, and then we'll see where we go from there. I will reanalyze that chart and determine where we go from there. And with that, guys, this is going to be a very small video, my return to YouTube, so I'll see you in the next one, guys. Good luck. Feel free to, by the way, subscribe, notifications, all the YouTuber stuff, and I'll see you in the next video, guys.